If you're thinking of setting up a company, you're probably hearing the word limited again and again. So just what does limited mean in the context of a limited company? And why do so many people form limited companies? Well, stay tuned to find out. Hi there, Nicholas Campion here from First Formations, and welcome to another episode of Whiteboard Thursday. A limited company is the second most popular form of actively trading business structure in the UK. According to the Federation of Small Businesses, there are currently over 2 million actively trading limited companies, compared to around 3.5 million active sole traders. In total, there are over 4 million limited companies registered with Companies House. So, what is a limited company? Limited companies are essentially incorporated businesses that can either be limited by shares or by guarantee. To break this down a little further, an incorporated business means that the company has its own legal personality. Since it's a legal entity in its own right, the business, rather than the owners, can enter into contracts and be held accountable for any liabilities. But when we say limited, what we're talking about is companies that are limited by shares or by guarantee. These companies limit the financial liability of their members. That is, the shareholders and they're limited by shares, or the guarantors and they're limited by guarantee, all the way up to the value of their investments or what they guarantee. So unlike sole traders and partnerships, the owners of limited companies are generally not personally liable for the debt of the organisation. Their own personal possessions are not at risk. The trade-off here is that limited companies must be registered with Companies House and their details will then appear on the public register. There are various rules and regulations that limited companies also must adhere to, most of which are set out in the Companies Act 2006. So that's what a limited company is. Let's just take a look at some of the types that are available. The vast majority of limited companies are private companies limited by shares. These are non-public companies whose ownership is structured through shares, even if it's just a single share owned by a sole director shareholder. This type of company can retain its profits after tax and distribute them to shareholders, for example via dividend payments. Another type of limited company, and one that we've previously already touched on, is a private company limited by guarantee. This is generally used for not-for-profit organisations. Instead of having shareholders, this type of company is run by guarantors whose liability extends to a guaranteed amount. Any profits are invested back into the company. A further type is a public limited company. This is similar to a private company limited by shares, but it must have a minimum allotted share capital of £50,000, of which at least 25% must be fully paid prior to starting business. The major benefit here is that it can offer its shares for sale to the general public, such as through a stock exchange. Now, you may have also heard of a limited liability partnership, or an LLP. This is similar to a limited company, although it's most definitely distinct. Whilst an LLP is also an incorporated business, both with its own legal personality and limited liability, although it does not have shares, its structure is more akin to that of a traditional partnership. It's quite a popular form of incorporated business, particularly in the professional services industry. However, it's not a limited company. Now let's take a look at some of the advantages of a limited company. Aside from the core benefits of having their own legal personality and protecting their members from personal liability of debts incurred by the business, limited companies also have some other significant advantages. The first of which is tax efficiency. Profits can be ploughed back into the business rather than necessarily being paid out as dividends and taxed. Then we have raising capital. Shares can be sold to generate new capital. Credibility is a big one as well. Limited companies are generally seen as having a more professional image when compared to that of sole traders. And of course, there's the matter of the company name. Once a company name has been registered with Companies House, it can't be used by another business. These are just some of the various other advantages a limited company has to offer. On the flip side, there is generally more administrative work involved with setting up and running a limited company, as opposed to starting out as a sole trader. But a company formation agent, like First Formations, can set up a limited company quickly and simply from only $12.99. And there you have it. Limited companies have some big advantages, and the biggest of which is actually what it says on the tin. Your risk is limited. The owners are given a major protection, which means in most cases when things go wrong, they won't be held personally liable for the debt of the company due to the limited liability. If you have any questions, please leave them in the comments section below. And in the meantime, be sure to subscribe to our channel to get more advice on limited companies, reporting requirements and tax obligations. We're always happy to hear from you and we can't wait to help. Until next time, cheerio.